You are listening to chartingwealth.com for Wednesday, the 12th of October, 2016. Markets down big today. Total market down 1.27%. Want to know why we use trend lines and why we use our derivative oscillator and particularly the big indicator, the MACD, because it works. We were still in a confirmed down move on our 2-day chart and on our weekly chart. Remember the advice we gave to you yesterday, the education advice, that all things being equal, the market tends to move in the direction of what? The largest chart. What's the direction of the largest chart, the weekly chart? Down. What's the direction of the 2-day chart? Down. We had an up day yesterday, the first day of the 2-day candle, and what did the market do? Well, it turned back in the direction of the biggest chart, in this case, charts. Market is still heading down. We will be redrawing our 2-day trend line soon enough. It's not showing up on our chart right now because it's totally consumed on the, well, I just zoomed in a little bit. You can see it underneath the yellow line. That is the weekly chart. We are now below both our 2-day and our weekly chart. We have seen the derivative oscillator heat up in downward momentum, and we have seen the MACD kink down and the signal liner both going down at this point. Market was down a whole lot more. I would say about 3 times more than it actually went down throughout the course of the day. The bulls pulled the market way down. The bears were able to push it up some. So what we saw happen was now did I say that right? Yes, the bulls were able to push it back up. The bears drug it way down, but still down 1.27%. Otherwise, hell, it'd be down like 3 or 4%. So lots of movement in the market. Now let's look at the 4-hour chart and see what we see. We see that the market was down some in the morning, way down in the afternoon, and it probably would have been down about 2% or so if it would have stayed all the way down. Crossed over going down in the morning. Afternoon would have been a great time for you to jump in an inverse fund or down move. That's the total market. Like we said, down 1.27%. Now let's go back to our 2-day chart and jump over and take a look at the S&P 500. That is, as shown to us by SPY, it was down almost as much as the total market, 1.26%. Derivative oscillator heated up going down, and we saw things kink over on the MACD. We saw a lot more down movement than the market settled out. We're now closed below the 2-day and the weekly trend line. If we look intraday at the 4-hour chart, what do we see? We saw a big crossover happen in the morning, good entry points in the morning and the afternoon. After you saw the morning close off below the daily, the 2-day and the weekly trend line, you had a good jumping in point in the afternoon, particularly with the derivative oscillator flipping over, going down. Lots of down momentum on that market. Remember how we saw that back up in the afternoon after the bump up in the morning. We saw some backup in the afternoon on the S&P 500 as depicted by SPY. So again, those of you who did not get in, you can look for another entry point as the week develops, if indeed there is one. Now let's continue to move through our charts. Next we go to QQQ. What is that? That's the NASDAQ 100. Again, still in a confirmed up move on the weekly chart, but the 2-day chart has been in a down move supposedly since the 26th of August. The problem is because of the upward pressure and momentum of that weekly chart, it's basically slid sideways and has actually seen more up than down movement. That is, again, why we say over and over, all things being equal, the market tends to move in the direction of the biggest chart. That's the weekly. That's why you should listen every week to our weekly review and forecast. If you're using our daily market worksheet, you could see that every day, that the weekly chart's still in a confirmed up move. Now, we again crossed back over, going down. Derivative oscillator also flipped over. Saw the MACD really hammer down along with the derivative oscillator. Now, let's look at the 4-hour chart. What do we see going? Well, it had popped up late in the day on Monday, and then Tuesday morning crossed back over going down. Again, a bit of a herky-jerky pattern. It did touch the the weekly trend line, but it has not crossed through it going down yet. So again, just be cautious jumping into those down moves with the cues. It is possible to jump into them and do okay, but you got to be really, really careful. And the way it's jerked back and forth, you would have been on some real uneven ground. Why trade a chart that isn't giving you a perfect setup? Don't trade it. The S&P 500 offers you more if you're going to, again, do your practice trades until we get that cleared up with the weekly trend and it comes back over moving in the same direction as your 2-day trend before you start worrying about the short-term 4-hour or half-day trend. Make sense? It ought to. Now, lastly, we're going to range back out to our 2-day chart. We're going to take a look at gold. Gold is still in a confirmed down move all the way back to when it crossed over back on the 25th of July, going down. And again, right after that, it did tick back up, but it stayed on those down moves and crossed over into down territory for good back on the 8th of August and has been going down except for 2 periods since then. Big down moves in gold. If we look at our 4-hour chart, which is the chart that's been working best for us for trading, what do we see going on? Well, gold again was up, not nearly as much as the markets themselves. Gold was up 0.51%, but gold appears to be trying to cross over going up. Derivative oscillators already flipped over. And typically in gold, when the derivative oscillator flips over, if we look back on our charts, gold tends to move up. Did not work. Well, it did not work all the way back on the 12th of August, but then it did work around the 17th of August. And prior to that, it worked pretty much every time the derivative oscillator flipped over. Gold moved up. So again, when you start seeing patterns where things work time and again for the most part, those are the kind of things you want to pay attention to. So, and again, remember our 4-hour chart has been working so well for us. So be ready. If it crosses over going up in gold, you might practice trade gold. Give it a shot. See how it works for you. Start learning how to use all these charts, when they work, when they don't work, because it's your experimenting and your practice that's going to really help you. That's what you need to do, my friends. Again, we're here for you. We love to hear from you. If you don't already have the free info that we send out with our newsletter, you need to sign up for the newsletter. You can do that at chartingwealth.com, absolutely free. What do you get? How to read a stock chart, our 15-minute guide that you need to understand what it is we do here every day. Plus, you'll get our daily market worksheet, which you can fill out and follow. If you want to put yourself into hyperspeed learning how to read these charts, you fill out that daily market worksheet every day. Plus, you'll get the layout that we use from freestockcharts.com. You will get our layout from Charting Wealth. If you want to help us out, little payback, a little reciprocity is always appreciated. What do? Please go. Make sure that you subscribe to our YouTube channel. It's the first place that we load up all of our information, both our training and our daily and weekly reviews. In addition, if you want to help us out, go to iTunes. Give us a 5-star rating. Say something nice about us. That will help our metrics out very, very much. You can also go to Facebook and friend us there or like us there. Say something nice about us. Give us a 5-star rating, but particularly iTunes and YouTube. We really appreciate that. It helps us with our metrics, and we continue to produce all of this information for you guys. We love the feedback. We love to hear from you. We'll do everything we can to help you. Lots of good training. Don't forget the latest training we have up there, which is how to use our daily market worksheet. You want to put your training on hyperdrive and really get these charts down quickly and well. That is a training you really need. Thank you so much. God bless. And for our Jewish friends out there, Hag Sameach, Yom Tov. It is Yom Kippur. Hope that you are having a great day of rest when it starts this evening. God bless you on Yom Kippur for that great holiday. starting Tuesday night all the way through Wednesday. God bless everyone. Take care from chartingwealth.com.